evaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to my futures family and friends. Having a little trouble connecting here this morning. Hopefully you're going to be able to see and hear everything. Welcome to the market prep for Wednesday, February the 15th. My name is John. Thank you for trusting me with your time as always. Looks like we've got things going all right now, so just happy to be here with everyone. As always, we're going to focus on finding accurate context, good risk management, and remaining patient in our trading. If things got going already, hopefully things are going your way. And I hope you had a nice Valentine's Day yesterday. I had a nice dinner with my wife and another couple. I had a nice meal at a local place here. It was very good and a very nice time. So this morning, retail sales came out a lot hotter than expected. Just to kind of go over the numbers, the core retail sales, 2.3%. They were looking for 0.8%. Retail sales month over month in January, looking for 1.8, came out 3%. Even the New York Empire State Manufacturing Index came out stronger than expected. There's still a slowdown, but not near as much of a slowdown as they were expecting for this last month in February. They were looking for minus 18. It came out minus 5.8. So it's looking like the numbers, economic numbers that the Feds are so cautiously and adamant about looking at are telling us that things aren't slowing down as much as they had hoped. I think we were going to be looking at some pretty hawkish Fed speak, if there are any speakers today. I don't necessarily see any on the schedule for today, but I know we've got more coming on later this week, and that's just one calendar that might not actually be right. So, yeah, what recession, Rooster. We'll be keeping an eye on the Fed and seeing what they're saying as they do come out and start speaking. I think we've got another 3 or 4 weeks before the next Fed meeting. So, and I know that they're planning on right now a 25 basis point rate hike. We'll see what happens as we get closer to that. As far as more economic numbers this morning, we're looking for industrial production at 8:15 Central, 9 o'clock Central, business inventories and the housing market index, and then at 9:30, of course, the EIA petroleum status report. The API put out a surprise boost in crude stocks last night, so it's going to be another interesting session for us for our crude oil traders. So, yeah, U.S. stocks are still set to open lower, a pretty good knee jerk to the downside, but looking more like they're going to be opening steady to lower more than just outright lower. Prior to today's opening economic data, things were looking a little bit better. We did get a knee jerk to the downside that has now recovered largely. Lacey, there's a... She wants to chime in here. Lacey, easy girl, easy. There's somebody walking a dog in front of the house, so long from the bottom, nice. Come on, Lacey, come on, girl. Come on, it's okay. I know, we'll be out there soon. I know, it's not fair. There's other dogs out there walking. I know, okay. All right. So there's a pretty long list of earnings today, probably not all that impactful. Some of the bigger ones this morning, Barclays, Kraft Heinz beats on both, Analog Devices beats on both. After the close, we're looking for Cisco, Shopify, and AIG, some of the bigger releases for earnings today. And again, a long list of earnings. Crude oil inventories popped per the API last night, up 10 million barrels plus. EIA forecast is for a boost of 1.1 million barrels. So We'll see how close the API and the EIA are at 9:30 this morning. VIX this morning up a little bit here at 1911. Dollar index up near its monthly high here at 103.87. I think that may be the monthly high. And we've got the yield on the 10-year up at 3.77%. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you can get the notifications when we do go live. Today is Wednesday. Back to group coaching. Oops, here is the link. Then after that, we'll have Make Hogue Money. There is the afternoon link. And we'll look forward to seeing you all there. It was off on Monday, so we didn't get to do the group coaching. So we're looking forward to a good session today. Again, that's at 12:30 Central and Make Hogue Money, 2 p.m. Central today. Good afternoon or good morning, everyone, I should say. The rooster crowing early this morning, winning the prize for being the first one in the room. Shaw Cunningham, happy Wednesday to you too. Brian, George, yes, the center of the universe has made her presence known this morning. Zach, good morning, family. Excited to get back in after my break to clear your head. Good job. Taking a break is always a good idea, and we're glad to have you back with us. NASDAQ, my brother Rick. Randolph, good morning. I love you, buddy. Alejandro, Scott saw and he conquered. Terry King, German, good morning. Glad to see you. Bill Phillips, Anissa, Charles March, Khalid, JT, good morning. Take it easy today, JT. Don Clemens, good morning. Looking for inspiration today. Well, that's what we hope to provide here on the market prep and all the things we do here. Jules, good morning. Favorite, good morning. Stephen, Vince, my guy. It's good to see you. Pablo, Jason, Trading Research, JM, Charles March. All good. Okay. All right. You got it going on. There's some sort of a hiccup here this morning. It must have been a very small gremlin. Octorap, Stephen, Jason, good morning. Sarah Hall, prayers and love to you as well. Rooster, what recession? Sujit, good morning. Terry is awake. Jerry is awake. Sorry, I'm hoping I am too. I'm not quite sure of that today. Shy Tran, good morning. I'm for reals. Long from the bottom. Let's go. Keep it going on. That's an awesome rusty golfer, my spirit animal. Lacey is the best market insight, right? Buy when Lacey barks. Lacey is the market mover. Good morning, Chart Language. Good morning, Timothy Marks, Warren, Don, Daniil. Yeah, if you need a good day, just start from zero and look for the right opportunities. Take your time, be patient. No Make Hogue Money Zoom for me today. Well, we'll miss you, Randolph. We'll talk about you while you're not there. Jerry is awake and laughing. All right, so we're going to get into these charts. Yesterday in the equities, the NASDAQ was the leader. The NASDAQ actually closed above the trend line, which would have provided continuation above a bull flag. The S&Ps did not. There was a lot of resistance there yesterday, and we're going to have a see what happens today. I mean, it looks like we're opening steady to lower. We're opening inside value, so no big change here after that number. It's going to take some time, I think, for our equities, for our investors, for our traders to digest this information. And I think the longer they digest it and the longer they get to kind of look at this without any hawkish Fed speech, we may have some upside opportunities. Not quite sure. I'm still looking for information that I've been seeking from these equities markets for over 2 weeks. Are we going to finally accept above that 4180 December high? Are we going to break out and find continuation above the bear flag? We've looked at both sides now this week overall, and we haven't been able to really accept outside of that channel. Again, we're going to see that in the charts here just right now. Let's take a look. So here's the daily. On the daily, the market is in essence telling us that it's looking for new information. We didn't add any open interest yesterday. As a matter of fact, on the S&Ps, we lost 3,300 in open interest. On the estimated number, we added 4,000 in the NASDAQ yesterday, but the NASDAQ presented as the stronger of the three markets, the Dow, the S&P, and the NASDAQ. So overall, in short time frame here, we're in short time frame control. We're in balance. That open interest loss yesterday I'm viewing as somewhat inert. Volume, it was actually pretty decent in futures yesterday, more so than the New York Stock Exchange. There's only 3.8 billion traded yesterday, which isn't a big number. So I'm looking at this increase in open interest as actually trying to say something. What, I don't know. So yesterday we had a potential bull flag breakout, but it failed. Here's what it looks like on the 30-minute chart. We got to get this in the right spot. There it is. So, we opened yesterday. We looked higher before the open when the economic numbers came out yesterday, that CPI. Failed to hold it, opened, looked above this trend line, were not able to accept above it, looked lower, came back to and wrestled with this trend line for the better part of the afternoon. We got close to it here, traded to it here, traded to it here. We could not find any buyers up there, so the market pulled back. Well, where is it now? Overnight inventory, maybe a little bit to the short side, but I'm not viewing it as a major decision maker in anything that I'm going to be doing this morning. We're in range, we're in value, we're almost looking like we're set to repair in regular trading hours what we repaired in the overnight. Overnight high, relatively close to this high volume node. Overnight low, value low from yesterday. High volume node is, of course, going to be the point of control here. So overnight, we've repaired a lot of this between here. Are we going to do that in regular trading hours? When we're inside value, it just tells me to stay patient. I'm likely to see better trade location as the day goes on. Probably not going to be thinking about an opening range trade, which, now that that's said, is probably what we should do. Here's the TPO chart. Upper extreme of the range yesterday, the high of the initial balance. We see some pretty decent excess up here, but that's, again, that test up near the 41.80 December high, and again, testing to and falling below that trend line on the 30-minute chart. We've got a nice ledge up here. I was looking for this market to potentially put up a late spike yesterday. It just would not do it. That trend line was just too much for buyers to bear. So here's that kind of area of potential repair. If we look at what we did in the overnight, this is the overnight profile. We've kind of done that already, and at least in the overnight. Maybe we'll see that happen here again in the regular trading hour session, going back to the TPO chart from yesterday without last night. So we have excess at the high, we have excess at the low. Normal variation trading day. I'm kind of calling this an extreme because the TPO point of control is in the upper half here of the profile, while the volume TPO point of control, I should say, is on the other extreme, which when we open between those two, I think there's going to be a pretty decent probability of trading to both before finding some sort of directional move. All right. Let's take a look at crude oil as it opens up here. So, in the medium time frame, we're very range bound here. We know we're in rollover. Volume and open interest are going to be very blurry. Volume in the front month was okay yesterday. We added 5,500 in open interest, but again, that can be more of a function of rollover than anything directional. Tomorrow is Thursday. That's the scheduled switch day. We're still trading March today. I will see I'll check the volume tomorrow morning to see if the volume looks like it's going to switch into the April contract tomorrow. If it is, we'll switch to the April contract tomorrow. But what are we looking at here? Are we looking at a potential bull flag here? It kind of looks like that on the 30-minute chart. EIA today, don't forget about that as well. So we've got, the market moving up to this level. We've got a couple of, at least one day of lower highs and lower lows on the 30-minute chart here. So does this make this a potential bull flag? It might. Where am I here? Overnight inventory has largely been reconciled from the short position it was in, so not going to be probably a factor in early decisions in trading today for me. We've got an inside regular trading hour range. Watch the overnight low / yesterday's low. This was just a move to go clean up some unfinished information down here in this naked volume point of control that the market targeted yesterday. There's, of course, more weak structure well below here, but not for a while. I'd say our weakest structure is the naked point of control here from Monday, which is right around last week's high. So my focus, I think, is if I get an opportunity near the overnight low in the crude oil today, I'll kind of focus on that. And then if we find buyers here at some point, and it may not be until after the EIA, I'll look for a move to last week's high / this naked point of control up here. In range below value. So here's the NASDAQ. And again, the NASDAQ did add 4,000 in open interest yesterday. The upside structure remains. This was a larger risk of breaking that upside structure, but it has held. Volume, again, look at the volume in futures yesterday. Pretty decent volume. I'm just kind of surprised that the open interest changes in the NASDAQ and the S&Ps aren't bigger than they were. Overall, in short time frame, we're range bound and short time frame controlled. Here's the 30. Inside extended trading hour range, very narrow range last night. Here's that trend line that we closed above. Okay, this could be a potential breakout of a bull flag, which would put us directional to the upside. We keep getting kind of punched in the face a little bit by some of the good economic numbers that might end up actually being negative for the market. Due, of course, to rates. Look where we are. We're right on it. We're in range, in value. Overnight inventory largely reconciled, maybe a little bit to the short side after this push to the downside. It's going to be a very interesting day, I think, here, mostly in the NASDAQ than the S&Ps. And here's another reason why. We had a normal trading day in the NASDAQ yesterday. Both the upper extreme of the initial balance and the lower extreme of the initial balance were the extremes of the regular trading hour session. The whole range yesterday was put in the first hour of trade in the NASDAQ yesterday. This is a balance. When the market does fall into balance, there's a tendency for price to go looking away from that area of balance. The point of control isn't all that thick, though. 1, 2, 3, 4, 5, 6, 7, 8. Not all that thick. Look at the overnight week low. Not a very strong high. Very range bound. Very even bell curve. It looks to me like this market is ready to take an excursion, an auction away from current levels. Direction, of course, unknown. So the move to the upside, I mean, the market kind of knee-jerked in both directions, but overall, the direction was to the upside yesterday in the NASDAQ, and there was a bit of a delta divergence in the NASDAQ yesterday. By the end of the session, delta had fallen to negative 2430. Does that indicate the possibility of longer time frame buyers? Well, we did add open interest. Did we see that the more aggressive traders yesterday were using market orders to hit bids? Well, that should push price lower, but it did not. So in any of these markets, I think that the signal of potential direction is going to come from the NASDAQ, not the S&Ps. S&Ps is the broadest of the indexes. So the NASDAQ is it's going to possibly lead the way because of this. Again, a normal trading day yesterday, a very even bell curve overnight. I'm looking for change, but I've been looking for change for 2 weeks. Change is coming. Don't get to choose when. Here's gold. The dollar is at monthly highs right now. That's going to weaken the currencies, weaken the metals. Yesterday, inert open interest, less than it was about $100 contract loss in open interest yesterday on relatively decent volume. We had a bear flag breakout, but we were wondering where the momentum was, and now finally we see some momentum, unfortunately, happening in the overnight session, but testing us right to an important inflection level as the weekly kickoff low, which is 1842. What's our low? 1841.50. I would say that's pretty close to an almost exact check of the weekly kickoff low. Now these levels are not meant to envelop a weekly range. These levels are areas where I believe longer time frame traders will be forced to adjust inventory, whether they cover shorts or add longs here and push price higher, or if they decide they're going to continue selling, look out below. So this is a very important level for me in gold. But an inert open interest session yesterday, kind of strange. Here's yesterday. Settlement, really close to the previous day. This market is seeking information. There were, several auctions to the upside and to the downside. None of them were successful. Well, now we've got overnight inventory to the short side. We've got a gap lower. If we can't close the gap, we're looking for opportunities to sell, but we're up against a major support level here and now with the weekly kickoff level. So I'm going to try and stay patient. I'm going to use this level for opportunities to help me limit risk. If we do close the gap, that may be something to think about. If we do get back into value from yesterday, the value area special situation play could play out. But I'm looking for what we've been looking for since breaking out of this bear flag, momentum. Finally, we see a little bit of momentum last night. Is it going to falter? Are we going to fail in this downside auction, or are we going to succeed? Take a look at the TPO chart. So a normal variation trading day, the upper extreme is the high of the regular trading hour session of the initial balance. Normal variation extreme day, bam, point of control low, volume point of control also low. A gap, important level, maybe some decent opportunity in this market today. We have pretty decent excess on the high here, less excess on the low. We already know where the market has opened, though. Very important level in gold today. Are we at that level in the euro? No. Are we at last week's low? Yes. Last week's low is the extreme of the area of balance that we've been in now for a little over a week. That strong dollar keeping the pressure on the metals and the currencies. We added 7,800 yesterday in the euro. off that high, off last week's high. Pretty decent push, thinking that we've added some new shorts at that level, and those new shorts are currently getting paid. Does selling beget more selling becomes the question. So open interest and volume yesterday, the increase pretty strong. There's our stab to the upside. We end up in the kind of lower third as far as the majority of the activity from yesterday, and we closed in the lower third. Excess high. Where did this market trade to? It traded to a naked point of control. It went up and closed the gap, and that was it. It cleaned up a little bit of old information there. Bear flag breakout right back to that level. That does tend to happen sometimes. What a wonderful opportunity for a short up there if you were paying attention. Here's the profile from yesterday, the initial balance, the high of the regular trading hour session. As a matter of fact, all of our markets yesterday left at least one extreme of the initial balance is the extreme of the regular trading hour session. So we batted 1,000 yesterday as far as that's concerned. The excess at the high, low excess low, testing to this naked point of control right now as the market opens up. This is interesting here. There's also a weak low here, a weak low here. Weak as far as the fact that we just traded to the point of control. Interesting markets, right? Interesting markets. Let's take a look at the 10-year, which also checked a couple of important levels yesterday and today. We added 24,000 new contracts on higher volume on a push to test the weekly kickoff low in the 10-year yesterday. Short time frame downside structure remains. Take a look at the 30. Where did this market knee jerk to? A naked point of control. Where did this market trade down to? A naked point of control. How visual are these markets? Market took us to the weekly kickoff low. We've looked below it now in the regular trading hour session and rejected it. We've rejected lower pricing, at least for now. We're still in range and in value. Stay patient, looking for opportunities. If we get another chance down here near yesterday's low and the weekly kickoff low, here's the TPO chart, which is going to show excessive excess at the high here, testing to that level, testing down to another naked point of control that's not even left on this chart, and attempting to continue lower. But that weekly kickoff low seems to be in the way, doesn't it? We're going to get a pullback? Entirely possible. And now, everybody's favorite market, the natural gas. Look at how range-bound this market has become for 2 weeks now. About 2 weeks. Looks like since the beginning of February, really. Range. We lost 1,300 in open interest on this push to the upside yesterday. Probably squeezed out some shorts. Take a look at the 30. Squeezed out some shorts. Almost a late spike at the end of the day yesterday, but not really. But if it was, we've opened below it, rejecting higher pricing. Overnight inventory, moot. Inert. Nada. Overnight high and low, I think, are going to be my focuses this morning if I were going to be trading this market. Check out the TPO chart. So excess at the top, low excess low, in range, largely in balance. Be patient today. Again, I'm looking more at the upper extreme of the area of balance, like yesterday's high and our overnight high, and perhaps an opportunity for us to see the overnight low to see if we get some continuation or support at that level. It's going to be a lot of fun. which these markets are fun. I mean, they're not always gratuitous, if that's the word I'm looking for. There's a lot of risk in this. We know we're going to have bad days. We know we're going to have trades that don't play out. But if we're going to be involved in this, we want to use our best judgment, our abilities to make the best possible decision, which is difficult, especially when we find ourselves under duress from losses from the markets. But if you're going to be involved, it just makes sense to make sure that your presence of mind, the things that you're doing, the decisions that you're making in trading are cognitive and not reactionary. Impulse is a killer. It's the impulse is what gets us in trades too early, and usually if I do something impulsive in trading, I recognize it immediately after I do it. I'll click the mouse and I'll say, "Oh, why do I always do this? This never works out." And then I'll, take the loss or the small profit or whatever it is and say, you know what, I got to calm down. I got to be cognitive in my decision making. I've got to follow my process. And if my process is good, I know over time that money is the byproduct of good decision making in trading. Notice we said decision making, not impulse. Intuition does have a lot to do with it, but intuition is something that takes a long time to develop because you're gonna see, a million different situations, and as you begin to recognize situations that have happened before, then you start to develop that intuition. It's not impulse, but sometimes it's hard to tell the difference. So, I firmly believe that more people could be more successful in futures trading. And again, successful is a subjective thing. If you tell me that you've been maintaining an account for a year, you haven't blown it out, you're not killing it, but you're maintaining it, to me, there's a level of success in that regard. Success in futures doesn't have to be millions. It has to be survival and buying the time to get better at what you're doing and knowing about markets, and more importantly, knowing about yourself. So allow yourself the opportunity to make the changes that you want in your trading and in your life. I don't think anybody gets into trading just because they want to risk money. The idea is to get good at it and to improve your life. Excuse me. And in doing so, we are creating change. If we can improve our life, we are creating change. And one thing that scares the heck out of people is change. And whether it's negative change, which of course always sucks, or positive change, it's scary. Change is scary. So you get into trading futures because you want to make a change. But if we were to achieve the change might be able to make, we're afraid of that. What might happen if we do become more successful in futures trading? What happens? We don't know the outcomes. There's always that fear involved. But trading is all about change. It's all about price change. It's all about context change. It's strategy change. It's hypothesis. We don't know the outcome. So we're in this whole world where change is everything. And yet I think a lot of people fear the change that they may be able to achieve by trading futures, trading the change in price, the change in context, the change in strategies, the change in hypotheses. All of it seems to make sense, but when it comes down to it, if we were to become successful, the scare, the frightened, I guess, child in us comes to the board. What if I make $1 million next year? Am I going to be able to keep that up? If I can't keep that up, I don't know if I can take that. Well, you'd better be able to take it because, number one, you've had a great year. You've improved your life. Maybe the next year is going to suck. But that's just the way it is. That's just the way it is. Change. Accept it. Want it. Feel it in every atom in your body. And you can bring that change. It starts with changing the mindset from going, I'm not going to take losses, to I'm going to cut winners, to I'm going to cut losses, and I'm going to see if I can let some winners run. It starts there. And every day we work towards it. Every day we start from zero, no matter what happened yesterday. If I made 10 grand yesterday, today I start from zero. If I lost $2,000 yesterday, today I start from zero. I'm not going to be chasing that $2,000. And I'm certainly I'm going to try not to ruin the previous great day that I just had. We see a lot of traders have wonderful trading days, and then the very next day, they have one of their worst trading days. It's because I think we have this idea that, well, we had a great day yesterday, we can expand our risk today, or we can, swing for the fences today because we're using their money. It's not. It's yours. You earned it yesterday. It's your job to keep it and add to it. Don't use it to blow up an account. Terrible. I hate that when that happens. Okay, enough of my yammering. Go embrace change today. Take your deep breath. Stay humble, grateful, creative, and centered. And think about that change that you're looking for. Does it scare you? It should. But we have to face that. Get out there and profit today. Have a great trading day. I'll see you for group coaching, 12:30 Central. And make Hogue Money today at 2. And we're going to see if we can't face the change together and make Hogue Money today. Have a great trading day, everyone. Blessings to you all, and I'll see you soon.